terms of employment like female labor force participation rate, different schemes introduced by the central government in order to boost employment across various sectors. I'm sorry for that. Different schemes like e-Shram portal, Pradhan Mantri Kaushal Vikas Yojana, these different types of schemes introduced by the ministries, the improvement, the progress, and the key economic areas, economic terms can be important for the prelims exam. So we are going to discuss this both the chapters in prelims as well as mains perspective. So let us begin our discussion. సార్ ఒకసారి పాజ్ చేయొచ్చా ఒకసారి పాజ్ చేయొచ్చా Yes, let us begin the discussion regarding global economic situation. In the last few classes, we have discussed regarding what is the economic situation of the world. It is very volatile and there are a lot of capital outflows. As a situation is volatile from the year 2018 because of the trade wars and also the investors moving to safe assets like that of gold or silver, there is lot of capital outflow. When there is capital outflow, wherever there are higher returns, for example, US have increased its interest rates compared to that of India. If we see in India, RBI monetary policy also have shifted from accommodative to neutral stance. Accommodative means when RBI will not cut interest rate or will not increase the interest rate because it gives more importance to growth. Growth will take a primary role rather than managing the inflation. That is called as accommodative stance. Whereas RBI moved from accommodative stance in January 2025 to the neutral stance, that is the RBI, rather than focusing on growth, it will either increase the interest rates or decrease the interest rates. Why? Our economic fundamentals are very strong. Either increase interest rates or lower interest rates. So basically the interest rates were around 5.29% interest rates that the RBI is charging, which is not very huge, and RBI have increased its CRR also. Cash reserve ratio also decreased its cash reserve ratio, that is from 4 to 3%. It means there is more money available for people in order to take loans, and even there are strong fundamentals in the economy, that is there is less inflation in the economy and there is good GDP growth and there is good credit rating because of fiscal consolidation, as we have seen in the last classes. So when it comes to monetary policy, we can't say that entirely our Indian economy is acting as a separate one, because we are in the deglobalized world. As much as our economy is dependent on independent growth or consumer led growth within the country, it is also has its link with the external sector. How this link is there is the important point, because because of the exports and because of the imports, as our imports are increasing and we are almost depend on FDI and FII inflows, there will be lot of dollar inflow into the country. When that inflow decreases or when the imports rises, the dollar availability within the country reduces. When the dollar availability within the country reduces, then there will be currency fluctuations also. Last 7 years, what is happening is, from the time protectionism started in 2018, US-China trade war, there is lot of volatility that is going on, except in the few brief periods. Even after 2018, we can see the COVID-19 disruptions where manufacturing activity has halted, and moreover the large investors, they don't know where to invest, because for everyone who is investing, for them returns are the most important thing. They invest in the countries which they feel as friendly countries, where there is stability of economic potential, where there will be no change in the policy stance abruptly. But in the last 7 years, we are seeing many countries are changing their policy stances with respect to trade with particular countries, or imposing tariffs on each other, or there will be supply chain disruptions due to terrorism or due to various other non-state actors taking over the oceans, where on which the global supply chain mechanism is dependent. So it is a lot of volatile situation which have made investors not to believe in, though there are good factors, though there are good fundamentals compared to other countries in India in the terms of GDP or inflation, they still wanted to invest in the US dollar because of its past track record, though it is having huge deficit. because US is charging the higher interest rate, or its repo rate is very huge, they feel that they give more returns, especially in the volatile period, because of crude oil prices increasing, because of supply chain disruption and lot of trade war economic situation, and many countries are moving towards making bilateral deals or changing their policy suddenly in order to stop imports, in order to stop exports. Imports and exports are not a separate thing. Imports and exports are not just final goods. There are a lot of intermediary goods that come to the nation in order to make even the final goods which are useful for the domestic demand. So even there is a possibility, if the supply chains get disrupted, it will create disruption in the internal economy also. So this is the reason why in this volatile situation, though other countries are at the high inflation, most of the countries including US is at a very high inflation than that of India, which have made US to increase its interest rates, which made lot of capital to outflow, because larger investors, rather than investing in the Indian stocks, Indian market, they feel to invest more in the US banks, where they get huge returns rather than that of some uncertainty that can happen. Especially if we see this in January 2025, there is a discussion of imposition of tariffs. And economic survey categorically says that the markets don't in reality, if there needs to be a change in the market, generally that change can be seen in the markets not because of demand, or not there will be no immediate change in the supply, or no immediate change in the response of repo rates or reverse repo rates. The change, what we can see about the economic momentum immediately if something happens, is the shock and the reaction that the financial markets give, be it global financial markets, Indian financial markets, because lot of these financial markets are very much dependent on digital ways. They operate in the digital ways. We can open our phone, we can see the stocks, we can see the share markets falling down, and lot of people are investing their money digitally. And it is very important to know, even if a small reaction somewhere happening, somewhere happening in some place in the world will impact the stocks here, because the world is entirely connected and everyone is dependent on oil. If oil supply disrupts, even the economic outflow of money into the markets also get disrupted. And this is where we can see there is a lot of market volatility. Huge market volatility is happening because of the nature of the market, plus also the digitalization of the market. And moreover, there is a lot of speculation, because if one large investor sells their entire stocks, it will be like a pack of cards falling all together. Lot of other investors will also do the same. Suppose if a famous person of, or if some stocks in India are very much popular with the rise of a particular company, there can be fabricated market creation of a particular stocks by inflating the stocks. The real value of the stocks might be different, but all people at once wanted to invest in a particular stock, which artificially raises the value of the stock rather than the real value of the stock, which actually make these kind of stocks not to work. And there is a lot of speculative market that also still goes on. So this is one point the economic survey discusses about the financial markets. So it is always the financial markets that see the change rather than that of real people seeing the market change in the economy. Other thing is financial markets, especially depending upon AI based algorithmic trading, where AI will take the decision to buy the stocks at a particular level, at the particular econometrics that are happening in the economy, based on the Sensex points or Nifty points, based on the global markets. The algorithm or computer, or whichever we call it as technology, AI itself will take the decision of investing your money in the stocks, which is called as algorithmic trading, which also impacts more it is good for people in order to make better decisions, and in order to take quick economic decisions rather than thinking and waiting for it. But it also makes a lot of people to withdraw their money all at once based on the same economic models which are built on the previous years and previous financial situations. They might not, AI itself might not properly analyze the situation. There should always be the human mind who need to back up with the AI. AI is not the sole factor, and it is still in a developing stage. And if all these markets and investors solely rely upon the AI, it will sure make all the funds to go in one direction rather than spreading the investments. And also, people in 2025, because of economic situation volatility, a lot of people wanted to invest in multiple markets because they want to diversify their risk portfolio. They don't want to invest in particularly in one company or in one country. They wanted to diversify their risk ratio between the gold, silver, because of the wars that are happening, because of the trade wars, because of the disruptions, because people who are larger investors, they invest lot amount of money and they expect huge returns to be there for their investment potential. So these are the reasons why there are lot of disruptions and lot of FDI and FII inflows. But the economic survey says that we still need to be cautious and we still need to be guarding our FDI and FII, because our exports are not raising, imports are similar, we are still importing, and our current account deficit has lot more to do with our economic potential. If our current account deficit is not good, there will be lot of currency depreciation in the economy, which can help exports, which can help imports but cannot help exports. So these are some of the reasons the economic survey highlights for the first 10 pages of the monetary policy chapter regarding the global situation and how it is connected with the parts of the world. So we have understood the global economic situation. Let us see the issues which are highlighted by the survey one by one. Till now, we have discussed the global economic situation, connectivity of the financial markets, the change that we can see in the financial markets rather than the change we can see from the people. If a market is falling down, or if we need to see the impact of RBI reducing the interest rate, or US economic system, or central bank of the US, if it wants to increase the rate, we can't see people reaction immediately. What reaction we can see immediately is people withdrawing their money. People withdrawing their money which they have invested in the stocks, equity, funds, in the stock market. And stock market is very volatile. Higher interest rates, high inflation, less GDP growth. That is a whole story of many countries we have already seen. And I have already told you, though we have strong economic fundamentals, we are shifting our capital to other country because of the higher returns, because their risk is huge in USA. But USA still needs money, government needs money. They give the bonds, and they invest, the larger corporates invest in the bonds of the US so that they can get good returns rather than investing in the corporate bond market or investing in the stocks, which is volatile now. Why it is volatile now? From 2018, there are series of economic situations, like economic slowdowns are there, COVID-19 disruption is there, don't know what will happen in the next 6 months, Ukraine-Russia war has been there, there is the supply chain disruption of oil prices rising up, sanctions on Russia, so there is no Russian oil in the market, which has reduced the supply base of oil itself. When there are less suppliers of oil, there will be increase in the price of oil, and there is no other choice, right? So all these things have made, from last 7 years, the global market to be volatile. This we have seen. But what economic survey says that is, though we have already had good economic indicators, strong potential because of consumption based economy, that does not mean we need to we should not focus on our FDI or FII. We need to do that. Why? FDI and FII are the basis through which lot of capital inflow come. What capital inflow? The investors will invest. When the investors invest, what will happen? Economy will grow in the country, technology will come, good capital will come. Our corporate bond market is very less, where the companies will take money. They need to go to banks. Banks need to accommodate people. Banks need to accommodate small businesses. How can banks accommodate huge capital required by big companies? So FDI and FII will bring dollars into the economy. If dollars come, what will happen? Supply of money reduces. What money? Rupee reduces. When supply of rupee reduces, currency appreciates. There will be less inflation in the economy. When dollars go outflow, when there is huge outflow in the dollars, what will happen? Currency circulation, that is Indian money circulations, will be huge, right? That point of time, less supply of dollar, more currency, Indian rupees supply, less dollar supply in the country leads to currency depreciating. Our rupee value will reduce. That is not just one factor. One of the reason. Second reason is imports and exports. What we are saying, as we import more, we need to sell we need to give away our dollars, right? If we export more, we can get more dollars into the country, which are risk aversion. We need to remember that many countries or importers and exporters, they still do at large chunks of their trade with using US dollar as the basic currency. But now what we are talking, US dollar itself is a made up system. It's just a paper money. US itself is not performing well. It has its own debt problems. So how come all the countries are believing in the US currency? Why that should be there? China has grown up, like, which is having equal GDP, that is $31 trillion. India has around 4.5 right now, $4.6 trillion that is expected. Right now we have reached up to a stage of 4 trillion. Size of the GDP, we cannot compare. India is growing, it's a large market, it will grow in the next 10 years up to a huge potential because all countries have grown. Growth rate is huge, but GDP size, it's an emerging market now. It will grow. Our GDP will grow. It will double by 10 years next decade. That does not mean we are in the same situation with that of China or USA. So that is the reason why many countries doesn't want to trade using the US dollar. They wanted to bring their own money while exporting or importing. And we are talking about BRICS currency, etc. Understood? Again, I have repeated what I have discussed before you people coming, so that you need to understand this is what the economic survey is telling us. Economic survey says that there should be prudence management, monetary management, plus at the same time there should be we need to focus also on the financial markets. Monetary management or money management and the growth plus inflation management itself will not shield us from the external shocks, because we are already into the globalized world. We cannot deglobalize our economic system. What we can do rather than deglobalizing is we need to focus more on our exports, and we need to create a situation where we can develop our corporate bond market. And in the fiscal policy also, we have seen we need to develop good centers, good trade centers like Gift City, Gandhinagar Gift City is there. Why can't we develop that as an international market in Asia? The international markets are in Hong Kong, and they are in Singapore, right? And lot of people, lot of larger investors, bigger companies in Asia, they go to that market and they sell off their assets if they need money. If they want to develop their assets or expand their business, they can't go to banks and ask crores and crores of money. Indian banks are not in that situation also. And especially after 2017, what happened? There are in 2017 there is lot of NPA problem, non-performing assets problem, right? Non-performing assets are very huge because the companies are not paying the money and they are defaulting. There are a lot of acts that were passed by the Indian Parliament, and there are 90 days timeline for each company which have taken the funds, and there are various alternatives like SURFACE Act is there, like there are certain laws that are passed that there should be minimum amount of money that should be given to people. Suppose if a bank is not performing well, and there are bank mergers, there are disinvestments. Now lot of NPAs got recovered, and there's a lot of financial systems that evolved from 2018. If we see UPI transactions, if we see that mobile Aadhaar linkage, if we see RBI increasing its surveillance even within the payments banking system, NPCI developing a bigger framework of payment systems, and RBI evolving its regulations for almost all the banks. See, there is more importance given to credit profile of a person, CIBIL score of a person. Whatever, before, what happens before 2016, suppose if you can take loan from multiple banks, but you can't do that now because there is credit profile based on whatever, because your bank accounts are linked to your PAN card. Before, that's not the case. There is no digitalization. People used to have multiple cards. They don't used to have bank cards. There is total linkage of your Aadhaar, PAN, and lot many bank accounts. How much ever transactions you do, be it UPI transactions, be it banks, everything is linked to your PAN card. Based on your PAN card, your CIBIL score will come. So it is very difficult now to take a loan based for a person who is a defaulter, because there is a lot more surveillance, there is inclusion of technology. So survey says that NPAs have reduced in a very better way. Now there is less problem of NPAs, more surplus for RBI coming in. So we have removed lot many problems. What we need to do? We need to focus on certain things. What are those certain things? We need to focus on insurance. We need to focus on pensions. We need to focus on microfinance institutions. What are microfinance institutions? The banks the non-banking financial companies, like individual companies who get assets, who get money from different investors. What they try to do is they act like a bank. They are non-banking. Non-banking means they don't they just give the loans. Yes, finance companies, they give the loans. They don't take the deposits. They just give the loans and recover the loans, collecting EMIs. Even these kind of financial systems we can see in the apps also that were emerging right now. They can provide easily, like Paytm payments bank is there. They can give easy loan for us based on our credit score, based on how much size of UPI transactions we are doing in a day, in a month. Before, loan is given based on what asset you have. There is no tracking of how many loans you have taken before. Now there is aggregator based on what is your profile, credit profile, based on how many UPI transactions you have done and what is your overall score. So it has reduced a lot of bogus transactions. It has reduced defaulters. It have given a lot of credit worthiness for the banks. Recovery ratio has increased for the banks. And within 90 days, if a defaulter is not paying the money, there can be selling of that asset. There are asset reconstruction companies. There are multiple reforms that RBI have done from the year 2017. Asset reconstruction companies are, suppose your company is not performing well, your company will be given into the hands of ARC. ARC will revive your company and get some basic funds and give that basic funds to RBI. So at least some of the cost will be recovered. It means that you will be not paying any money. All this money that banks are giving is the surplus the RBI has. And we have seen in the last fiscal policy also, whatever RBI surpluses are there based on transactions or whatever RBI do, all this money will go where? To the center or to the government. It is people's money. So there is overall fiscal and monetary management that is going on. All the fundamentals in the country are good. That is what the economic survey says. But still there are FDI and FII problems. For these problems, we need to develop our financial market. And as I told you, the gift city, we need to make larger investors come to this international financial city, and we need to modernize this. Modernize that gift city place so that larger investors, larger stockbrokers, lot of international financial markets, companies who will give money to even the other countries. Now, many people or larger investors, they can't look towards India to get the capital. Where they will go if they need more capital? Our Indian companies or other global companies, big companies, they go to international markets like either US or Hong Kong or Singapore in order to liquidate their assets or get some finance or go for mergers and acquisitions there, because that is where total market is. Total money is there in that big international financial market cities, but not in India. So we are trying to develop such kind of market so that even our companies don't need to go elsewhere. If company is going elsewhere and asking and buying and asking for money, it means there will be additional costs for them. There will be taxes for them, which increase their cost of the capital. But if they all do these same things in India, we are saying in the budget, there will be no there will be no customs duty, there will be no taxes, there will be no MAT. MAT has been reduced. And for gift city, what the finance minister is saying, for 15 years, there will be tax holiday for 20 years. For the next 15 years also, there will be minimum tax only. It means we are creating a predictive policy. Understood? So the economic survey basically focuses on what we need to do right now is focus on MFIs, microfinance institutions. And these MFIs, what they need to do, what they are doing, why did they start? They started to help people. But what they are doing right now, all the bigger investors, they don't know where to invest. If they invest in banks, they'll give low returns. Stock markets are very volatile because global economic situations I have discussed with you. Where they'll go? They are putting their total money in NBFCs, non-banking financial companies, as shareholders, as promoters, as a partners of the company. When they are putting that money, they are trying, because why they are giving loans to this normal people? India middle class is very huge. Repayment is good within India. People are taking loans, including women. They wanted to start their businesses, and people are not just taking money for starting business. They are small loans, very, very small loans. For daily expenses also people are taking, right? And when they are doing this, they are not even taking any asset into as a collateral. Based on your credit worthiness, the money is given by MFI. Payment, this Paytm loan or whatever you see, this is also same kind of loans that you get through apps or through other NBFCs. So basically, the risk is huge. When the risk is huge, what these MFIs do? They say that pay more interest rates. There is cumulative interest on interest, and their entire focus is on running that interest rates over many years, not to make the middle class have social welfare. NBFC as a concept has started with SHG, self-help group concept, in 1998 or 1997. Muhammad Yunus has started this concept in Bangladesh to make people give small loan make them to create assets, give employment for the people, create better outcomes like education and health or small businesses. But that have totally shifted. The idea is not to create welfare anymore. The idea is backed up over a period of time. Before, NABARD used to NABARD used to credit money to NBFCs. Now NBFCs are charging the interest rates much higher than the banks. Their minimum interest rate will be around 12 and 18%, and their profit is to get lot of money, extract money from Indian people. So RBI focuses, economic survey basically focuses on this chapter: insurance, increasing pensions, increasing the insurance market, pension market. Okay, and there is no discussion regarding NPAs, etc. The discussion is more towards how to develop a corporate bond market within India. How to develop that, what is the use of it, what India must do. These are certain aspects discussed. And then we will discuss employment thing. The overall situation is that, as I have explained you, so Indian corporate bond market is very shallow. It did not develop. Corporates still take lot of money from banks. RBI, whatever government securities it sell, either they take that or from the banks they take money. They don't take by giving bonds. Corporate themselves can float the bonds rather than invest, rather than going for primary market and to issue the shares. Bond is what? Bond is different than that of a stock, right? So size of this corporate bond market is 16 to 17% of GDP. You can write this in your answers. Whatever I am saying, these figures, you can use this in your answers. The economic situation you have understood. Just write corporate bond market size is 16 to 17% of GDP. In advanced markets, it is 70 to 120. So whenever some question is asked in the exam, you can use this figures. You need to remember this. Why is the problem? There can be question why still there is, we are talking about this corporate bond market from 2017 onwards. There is no improvement in that. So what is the, why there is shallow bond market in India? It is a limited long-term finance. So a lot of finance these companies can take or through the share market, that is very limited. And there is, a shallow bond market means for companies, bond finances are taken for short term. Long term finance making options are not available because of lack of corporate bond market. People not investing in that, or there should be at least some middle institutions who will make the companies come on to the board, and also people come on to the board and act as some credit guarantor. Now RBI is there. Suppose if a bank is defaulting, like Punjab National Bank, we have seen some district banks defaulting, some regional banks defaulting. Who are the ones who will assure the money? Either government or RBI. Suppose if you want to develop this corporate bond market, corporates cannot come, I will develop. One company cannot do anything if they are just floating the bonds, but no one is investing. What is the purpose of that bonds? That is the reason. There is a lot of trust issue. So what we need to do is we need to institutionalize market making initiator, or there should be some institution in between who can make both companies to sell bonds, people to invest in that bonds. Higher cost of borrowing. See, if bond market is not there, people will be competing for same loans, and also corporates will be competing for the same loans from the banks. For I have 10 rupees, 3 people are fighting for it. What will I say? I'll give it 5 rupees interest. And people are very much dire need of capital. If capital is not there, how come businesses will grow? All people don't do business having capital, right? Understanding? Yes. Yes, it's not like a government bond, right? There is no guarantor if especially in long term. Indian corporate market is not that much evolved, so people will trust it and people invest, and everyone needs shorter returns. And if you see the larger investors, they don't need money in the short term, they need money in the long term, they need huge returns. But economic situation is volatile, they can't park their funds within India or within Indian companies, they can't believe. And what they are doing is they are diversifying their risk ratio. It means rather than investing in only US bonds, rather than investing only in the Indian companies, they are throwing some money in gold, they are throwing some money there, here and there, real estate, everywhere they'll diversify. And the chunk of money that comes to corporates within India is less. And moreover, as we have discussed, most of these corporates want to go outside, invest in other markets rather than that of India. They don't believe here. And whatever companies require money, they go outside and take that money. Why can't we make our own people who have money come and give money to our own companies? That is the reason why gift city as an idea has evolved. Okay. Too much pressure on banks. Interest rates will be high. People also cannot take. And moreover, we have priority sector lendings and all. For infrastructure, less interest rate. For agriculture, less interest rate. Less competition in lending. Less competition in lending. It means only banks are the source. The companies cannot say, if I can't see. If there is good corporate bond market and there is lot of surplus for RBI tomorrow, RBI can say, okay, corporates come to me, I'll give at a lesser interest rate. That is not the case here. There are a lot of people competing already. RBI solely decides its interest rates based on what is inflation in the Indian economy. If inflation is high, RBI says, I'll increase the interest rate. That is accommodative and neutral. Accommodative means what? RBI says, I will not bother about inflation for a time period. I will bother about the growth. Growth is important for government as well as RBI. But Monetary Policy Committee is a component of RBI which has been created in 2016, where their sole idea is to manage inflation. That is accommodative policy stance, where though there is some sort of inflation that is growing on, let me propel the growth initially, later I will increase the rates and decrease the inflation. And RBI has shifted from accommodative to neutral. 5.25, it has reduced the interest rate. It means what? Increase the interest rate. So neutral means what? I will not just focus on growth. I'll not what is the general duty of MPC? If there is inflation, increase the interest. If there is decreasing inflation, decrease the interest rates also, right? Yes or no? Neutral means I'll not bother about the growth. I'll generally go according to the inflation. That is a neutral policy stance. RBI started this neutral. It means I'll focus on inflation, whatever the growth is, from 2025 onwards. But still, we have less inflation. Good indicators are there within India. Logistics are growing. The economic survey talks about demographic dividend. There are 65 crore people working within India. 15 to 59 years of age people who are working age population. They want to work and they are working. Credit growth is there. NPAs have reduced, fiscal deficit is low, it is reducing from the time COVID. We did not see elsewhere except in Brazil. We discussed fiscal policy things. So good indicators are there. But some problems still persists. Okay. So for fast growing economic like India, this is one of the constraint. FDI and FII outflows are one constraint. Then this corporate bond market is the constraint. So there is low liquidity. Bonds are not easily traded after issue. So even corporate bonds are issued. People are buying. They need to put that money. You can't second trade the bonds. There is no further derivative market of that bonds that are bought by a investor. You can't sell it off if you want to. Buyers fear they may not find the sellers later. Suppose if you are buying for 10 years, let us say, that is a very less amount of time, because long-term finance means it can go up to 30 years like that. Now within 7 years, again situation can change, companies can be in the turmoil. People want to invest, trade money, take the money, keep the money, and want to make quicker profits, right? And we have seen something like hedge funds also in the budget time. Okay, so this discourages the participation generally, and most bond buyers are big institutions, banks and insurance companies. Ordinary investors, where they see, don't think ordinary investors have less money. If we see the size of huge population, most of the people in India, if we see, only 10% are rich, like wealthier people. Only 10% want to invest in the corporate bond market, 10 to 15%. What happens to rest of the middle class people? Whatever money they have, they might be individually less, but at the size, it will be very huge, no? And they wanted to not invest in the bond market rather than the share market. Okay? So weak market making. Institutions continuously buy and sell bonds to provide liquidity. In India, very few active market makers, so trading volumes in the corporate bond market remain low. Lack of product, limited variety of bond instruments. There are no different varieties of bonds, only either long term or short term. There is no secondary market for that. Inadequate credit enhancement mechanisms, lower investor confidence. These are certain things which are main points for you. We'll give a PDF for this main points. So survey, what it says is better liquidity framework should be there. It means even the investors are buying, at least after 2 years they should be in a situation to sell that off if they need money, or if the bond is not working properly. More retail investor access. It means not just larger investors, but smaller investors also need to access the bond market. Stronger market making system should be there. It means the government need to give incentives for the bond market to develop. How? There should be less taxes on that bonds. There should be less taxes. There should be some guarantees from the government also. And moreover, even the government can only do anything only based on how it tax these companies or how it tax those bonds. That's all. Government can't say if corporates are not giving you money, government can't pay the money. It's not from the banks where the money is flowing. Government cannot be the guarantor here. What it can do at max is tax. But what other thing government can do is create certain policies within India where however the governments change, be it the central government or state governments, they need to have better indicators within the country. That's why states' fiscal discipline is more important for the investors to come and develop market here. Okay? And what it says is continuity in policies, where people will feel even after 10 years, India is growing individually, like domestic wise, but internationally if it needs to grow, there should be good currency rate. And moreover, how much ever other things we say, unless we do something about our manufacturing is where lot of elasticity is there. Employment elasticity. Tomorrow monsoon is unpredictable. Agriculture can be there or cannot be there year wise if we see. Then services sector, IT sector, we are seeing the situation in 2025. Lot of companies have laid off 30,000 people. Indian companies or bigger service companies. AI is coming, disruption is coming. Where all these people will go? all the people, all the demographic dividend, if we cannot use them, will the government provide them money like Rahul Gandhi says that pay the universal income for all the people, universal basic income? Then India will become like people will get free money, they'll go movies, spend the money, they don't do anything, right? So where we need to do is, why can't we increase the GDP potential? GDP is not just the GDP growth rate of the country, the size, where the size will come. Manufacturing sector, logistics. That's government is doing whatever it can do by providing infrastructure, plug and play model, public private partnership, garnering the land, single window clearance, wherever it can give the packages, reducing its fiscal deficit, GST reforms, labor reforms, all it is doing. But creating employment potential comes from where? Economic survey does not just talk about numbers, it talks about the ideas, it talks about the where the government need to see in the next few years. Already India is doing a lot of things in adapting AI. AI is going to be the third largest, India is going to become the second largest adaptive market for AI. That does not mean there is innovation within India. We are adopting it. It means just we are using, we are not creating some workflows out of it. And we are depending on AI companies that are outside of India, generating lot of data for them, and they mine that data, process that data, create goods according to Indian preferences and sell those goods, and money outflows, rather than we creating something like supply chains. Through creating supply chains, being a supplier of lot of countries, that is how the China has grown, right? There is lot of investor confidence in China. If they invest, and they are talking about BRI, we can't talk about BRI. We just give some 100 billion or 10 billion loan to Pakistan, Nepal. We just say that we are great. That's all. So size is more important. Employment, manufacturing, exports are more important. That is where we can create investor confidence. Okay? And investors always see long-term growth rather than the growth that is just coming from the consumer demand. Tomorrow, in the next year, consumer demand will be there just because working age population is there. But structurally, we see unemployment rates might not be so huge. That does not mean unemployment rate is reducing in India. There is only 56% of workforce. And almost this 56% of workforce, where they are there, 80% of people are there in the informal sector. Right? Now we are going for formalization through various portals. We wanted to include almost all the workers, be it domestic workers. We wanted to register them in the Ministry of Labor Employment. There should be some PF should be given to them, basic minimum wages. We discussed in the labor codes. We are starting now. Okay? The overall economic situation. Better credit rating. So survey says that there should be better credit rating mechanisms, easier issuance process if the company wants to float the bonds. Cost of capital is also huge within India. Cost of capital, macroeconomic point, cost of capital is huge. In other countries, cost of capital might be more, but that does not mean we are having less cost of capital. Cost of capital means how much they borrow. Why cost of capital is huge? Very simple. Just now I told. Why there is cost of capital huge? Huh? Less availability of money. People are competing for the same money. Yes. Businesses borrow, projects are investments are, it is the interest rate at which, what is the cost of capital? Cost of capital is where at which interest rate people get money. Different kinds of people. Higher cost of capital means lesser investment. Okay. So India's cost of capital is structurally high. See, we are not talking in comparison with other countries. In comparison with other countries, it might be less if we say, but we need to see size of the country, if we need to see size of the economy, there are many things. Structurally within the country, the cost is high compared to the at which cost we give loans before. Within the same sized economies, what is the value of our currency, what is the value of rupee, what is our purchasing parity? If we calculate on that basis, if we see the value of 1 rupee and the value of 1 rupee that we give as a loan and upon which we put the interest rate, structurally if we see like that, based on our value of currency, the interests are huge. Based on repo rate, reverse repo rate, yes, we are comparatively better than other countries. That does not mean our cost of capital is very less. Within India, based on the past trends, we cannot take at a low interest rates the loans. Okay, and main reason is savings and investment gap. Many people save money, but they don't invest money. And moreover, if they invest more in the other goods, like the shares, etc., trading, etc. They want to make the quicker profits. So if the country's domestic savings are not enough to fund investments, it must borrow from abroad. Interest rates raise, capital becomes expensive, and moreover there is a link between this cost of capital and current account deficit. So current account balance shows exports minus imports plus remittances and other flows, but it also says that better current account balance is lower interest rates, because our currency will appreciate, the value of currency will be good. Based on that, the interest rates, even the lot of FDIs will come, lot of capital inflow will come. When there is capital inflow, there is less requirement for companies take money from the banks. See, if FDIs are coming, there is availability of capital to lot many sectors. They will start demanding loans from the banks less. It means there will be remaining amount available for others who can take from the bank. So current account deficit link is there with the cost of capital. So there is a link between cost of capital plus current account balance. If current account balance, it means if our exports are good, balance will be good. There will be no negative balance of payment. Understood?
Does cryptocurrency is directly or indirectly proportional to cost of capital? Does it impact?
Cryptocurrency you are talking about. So what that is entirely,
It is
yes.
diversifying the investments like shares.
No, it's entirely different. Only few people who will feel that they want to make aggressive profits, they brought it as an alternative investment. Huh?
Globally,
Globally?
globally does it
Yes.
impact
Crypto, based on crypto. People,
investments, not crypto, investments in crypto?
investments in crypto?
It's diversifying the investments.
Yes,
Does it
yes.
impact directly or proportional or indirectly proportional to the cost of capital increase?
See, that is, if people want to invest in crypto, that is entirely a different section of capital that goes out where. Obviously, there will be impact not just on Indian market, there will be impact in other ways also. But there are a lot of people who have invested. Sometimes it increases. Now it is very, very on the decline. People need to realize even central banks are not very fine with these cryptos and all. Lot of this black money, lot of these things will go into those. So that is entirely a different issue. We are talking about legit where the money is growing, among where this money is flowing across the market, whether it is US market or Indian market. There are people outside the US, inside India. Many people might invest in the market based on their crypto market, based on their investment decisions, which will reduce our capital for sure. But we need to see not only Indian market getting affected. All financial system globally can get affected if lot of people invest their money, can go outflow, like there will be outflow of money, crowding out effect can be there. Okay, that is a different set of issue which will not only selectively affect only US investors or Indian, everyone it will invest. It will affect even the global financial markets along with India. Okay, not directly, but there will be impact on the global systems, not especially on Indian market or cost of capital getting risen. Okay, cost of capital within India is rising is India's problem. Corporate bond market problem, FDI problem. Crypto is very niche impact will be there. We can't say 10% or 2%. There will be impact because lot of money can come to India. But if there is, that is a situation based thing. And many people invest not just because crypto is there or crypto not being there. People invest how India, based on what basis India is performing, right? Based on other conditions, people invest. If they want to invest, they can invest not just in crypto, they can invest in Brazil, they can invest in China, Vietnam. Why they want to invest in India? They want to invest if our currency is good or not. Based on what our currency will be good. Purchasing power parity, it will be good. Not just size, not just GDP growth rate. GDP growth rate will be there for all the economies. Either can increase or decrease. Size of the economy is important. Creating goods is important. Value based goods is important. Not just selling the exports. 1 rupee export can be sent. 1000 rupee value export can also be sent. Our exports are only service exports. IT stocks are also falling down. Lot of FDI and FII where they are coming, where they are going. Outside FDI and FII, they are going into service stocks, services sector, not in the manufacturing sector. And last few days, what we have seen, how much loss have come to services stocks. Lot of people have pulled it off. Why? There is new AI that came into market, that is Claude AI, Anthropic Claude AI, and people don't want to, big companies don't want to employ people. When there is no employment for people, when they're not getting money, where they will demand from? What will happen to the consumer market if lot of people are laid off and lot of work is entirely automated? Don't need people. The work will happen through AI. Don't need developers. So lot of stocks have fallen. Recently, last week or yes, last week it happened. Okay. Crypto thing is not that much substantial right now. So 1%, see, this one you write in your notes, current account balance has a link with lower interest rate. There can be tomorrow in the prelims, if they say that if there is good current account balance, how will the cost of capital for in India? Current account balance is positive, cost of capital will be less or neutral. Cost of capital is high if there is current account deficit. Yes, true. This is how the questions will be asked. 1% improvement in current account balance reduces the interest rates by 2.8 basis points. Okay, they don't ask this much into detail, but you can write in your answers, mains answers. Okay. Listen, if we have good capital, how we'll get the good capital? Exports high, there will be lot of inflow of dollars into the economy. If inflow of dollars is huge, then there will be less inflation, more capital available for the companies, lower good currency rate will be there. When based on the currency rate, people will invest and they'll get the profits based on the currency rate only, right? If the currency depreciate and if it is not working properly, people don't feel how much ever return you are making in dollars, they will expect the returns over a period of time. So currency rate is more important. Currency rate depends always on our exports. How much exports we are sending in comparison to other countries, and how much, because we are still almost trading in dollar terms. Don't know what will happen tomorrow, whether we will trade in BRICS currency, whether we will buy Russian oil, we don't know. Already we are seeing that will be not possible because we gave up. We are saying that we will not buy oil, we'll sign whatever US says, we will do that. Okay, from December 2025 only we stopped buying oil. Russian oil, not oil, Russian oil. Okay, so external dependence falls. Why? If all that happen, we don't need to depend on other markets. Capital will become cheaper, borrowing cost will decline. As I have told you before, that is again written like that. Just understand thing, logically apply things and you will get the answer. This is how logic and application kind of questions can come. In the prelims exam, like there are 2 to 3 questions every year based on balance of payments. Okay, and this cost of capital, current account balance, linkage is more important for the prelims exam. So shallow bond market will limit long-term capital subsidy. Saving shortfalls, we are not saving, even if we say we are not investing, it will raises the interest rate. Weak current account balance is equal to cost of capital rising. Yes. Now we will discuss about pension system. India's pension system is expanding through 3 main schemes, that is Atal Pension Yojana, National Pension System, Unified Pension Scheme. There are these 3 pension schemes. So National Pension Scheme subscribers have been 2.1 crore subscribers are there under National Pension Scheme. Assets under management are 16, under total pension schemes there are 16.1 lakh crore. Okay, this together form the backbone of India's formal retirement savings framework, where all these pensions coming from formal workforce. It means very less people are into the pension based system. Now labor code reformation, maybe many people can come under the basket of formalization. Because of gig workers we are formalizing them. For informal workers in different states, we are creating a national portal. We are talking about average pensions for them also. Employer contribution, universal basic income, we are talking it about. But right now, these are the 3 schemes. General pension schemes for the people. After working either in a government job or in the formal set of employment, government will contribute some percentage in that. Employer will contribute. Employee who is working, whatever money they get, it will get deducted every month and it will be in the contribution. And we are talking about pension portability, or this portability of provident funds, where people, if they are working in one company going to other company, they can integrate it throughout your working age. How much ever companies you change, you don't need to change your pension numbers or account numbers. Into the same pension account number, universal number will be there. How much ever you have saved, that will go into that account, rather than you creating separate accounts or there will not be any breaks in between. So this shows that rising participation, growing long-term savings pool over a period of time. But what is the main concern? Pension coverage is still very limited because of total workforce. Basic reasons why. People are still in the informal sector. Many workers outside, they work as a gig workers, freelancers. Many people are like that. And lack of awareness and irregular incomes. People don't have awareness except in the services industry, agriculture, no thinking about pension. Manufacturing itself is very less within India. and lot of 90% of the growth informal MSMEs. Why MSMEs? If there are huge MSMEs in the medium size, they need to pay basic income for all the people, so they'll stay micro just to not pay basic decent salaries and pensions for the people. These problems we have already seen in our basic economic classes. We will know whichever book we read, right? So structural reality is huge young population, demographic dividend, but we are not using them. Increasing life expectancy. Because of medical advantage technologies, life expectancy is increasing. It means what economic survey says that India need to focus on old age people. In the next 10 years, there is going to be the old age population. Right now, the population is around 2.4% or 3% old age people, and health costs are rising. Life expectancy rising means health costs will also rise. Okay, so pension need to be there. Low social security coverage is there. Therefore, expanding pension is essential for people. Okay, old age income security, reducing future fiscal burden, household financial stability. See, economic survey don't just talk about numbers. It talks about societal aspects also, social aspects also. Okay, even for society, this is important. Even in essay, this kind of analysis will be important, where you will use these numbers, these ideas in your answer writing, whichever topic it is, especially in GS3 and GS2, you will use it. Okay. Insurance sector performance. The insurance sector has become financially large. Okay, total assets under management in the insurance sector is 74.4 lakh crore. That entire insurance business we say. Total premium income that people pay for the insurance companies. The insurance companies total their business potential is 74 lakh crore. Whatever the premiums they sell for the people, because all the insurance companies make people pay the premium if they subscribe, right? You are taking some insurance, you will pay the premium. Something happened to you, they'll give the money, health or life insurance or general insurance. Even though the sector is large in absolute terms, in terms of GDP 3.7. So insurance sector is 3.7 to the 3.7% of the GDP. You can write that. It is 3.7% of the GDP. It means what? Lot many people are not coming under insurance. Lot of economic activities are not coming under insurance. Bigger economies, even if they invest in the share, for that also there can be insurance. But for us only in either life insurance or mobile insurance, car insurance, right? People don't take insurance for everything. And that also, insurance as a concept grown in a decade even only in the urban areas, not in the rural areas, because there are social taboos with respect to insurance, and insurance will be taken by only formal sector employees. In informal, they don't have salaries only. Why they will talk about insurance? They just feel, let me save enough, forget about insurance. Okay. So life insurance dominates 91% of that. Life insurance corporation, which is under the government, they have 91% of assets under management. 74 lakh crore, it means almost like 69 or 68 crores are under life insurance only. People invest more in life insurance rather than any other insurance. So non-health, everything is very small. So the survey says that high acquisition and distribution costs, selling insurance is very expensive. Heavy dependence on agents, middle people, brokers, high commissions for the people who will, it means generally we are not in a mindset to get insured. Lot of pressure need to be put by the middle agents. They need to work 24/7. Their salaries will go. So limited digital adoption. People generally, digital adoption itself is less uh, in rural areas, right? So this keeps the premiums high and outreach low. There is digital divide still. We are talking about digital divide. Many people, farmers, they can't enroll into banks. They can't use UPI transactions. They can't know how to use phone for farming, etc. Because they can't listen into the uh, local languages. So there is digital divide and linguistic divide also that exists, because and India is focusing towards that, creating AI based local digital language systems. Sabka Bima Sabki Suraksha 2025. This is a major policy reform act that came into place. It was highlighted. FDI limit raised in the insurance sector, that is 100%. Foreign investment was capped before, only 49 or 51%. Now it is full ownership of insurance companies. It means lot many insurance companies come. When they come, it makes Indian insurance companies also to make the premiums less for the people, so that people can pay every month very less amount of money. So people will feel, okay, let me go for insurance also. Right now, less players means what? More money can be. So more capital comes, there will be competition. Okay, so more capital, better technology, global expertise, and more competition. More competition will make consumers get benefited. Okay, there we'll go for whichever is economical, not expensive. Okay, just like we have seen this discussion in the case of Indigo. There is only duopoly in the aircraft market. Now, lot of other players will come, our costs will reduce. Stronger consumer protection will be there. People at large, if people are going, people will try to frame laws. Digitally, we have adopted now. If digital transactions are not adopted, Indian government will not come with how to tax our UPI transactions. Till now, UPI transactions are not taxed, but we are doing at a huge scale every day. Even the small consumers are doing it. The minister is telling, I'll tax you on UPI transactions also. Okay, so idea behind that, I hope you understood. So protection against mis-selling. So when people emerge, there will be lot of nitty-gritties that will come. Companies also will try to make the profits. Then laws also will evolve to benefit Indian people rather than companies. Ease of doing business will also improve. Okay, that is general thing. Continuing challenges in insurance sector. So this is where the questions come in your economy GS3 for your mains exam. What are the problems in the insurance sector? What is the FDI that is allowed? What is Bima Suraksha Act? They can ask you. Under Bima Suraksha Act, 100% FDI is allowed in the insurance sector. What are problems? High distribution costs, heavy agent commissions. This is where you will write your answers. Expensive customer acquisition. It means people need to show 100 reasons to get that, like to get the sum insured for them. Then large uninsured population is there. In agriculture sector, even if they are insured, lot of premium is paid by the government. Pradhan Mantri Suraksha Bima Yojana. What is the insurance that is? Fasal Bima Yojana is there for crop insurance. Limited awareness. Then need for digital transformation, use of technology for sales, claims. You can't put a Google picture of your disease. You can't put a Google picture of crop failure and say my crop is failed. There should be proper systems to quantify the disturbance that has created. Or see, many of the farmers enroll for it, but in the name of unnatural disasters, we can't quantify the disaster. Many people don't get, though they pay the premium. So there should be technology which will assess properly whether this clause is there. Based on clauses or loopholes, ambiguity, many of the companies don't give the money which they have promised the insured people. Okay, So underwriting means what? What is underwriting? It means while giving the insurance, they'll wantedly leave some clauses or put tight conditions for farmers or general people to get the money even if the disaster happen. It means they will try to control the money rather than give the money. Their sole idea is to control the money rather than not going and to collect the premiums. Underwriting means tighter policy is there and easily people don't get insurance. This underwriting problem is there even with the banks also. Banks underwriting means they don't easily give the loans for the people. It will get difficult for the people to get the loans. Underwriting is good right now. Why? If underwriting of assets is there, RBI underwriting means RBI is facing stricter limitations on banks while giving the loans. Now banks are checking for multiple things before giving you a loan. Before that is not the case. Banks used to give loans for the bigger people. Okay, that is underwriting of assets. There is so need for digital transaction, risk assessment, all these things must be there. Okay, risk assessment must be there. If risk is huge, premium must be huge. Then only companies will feel that okay, if maybe I can give. Premium is also huge, right? We can't say put the premium low because they also need to make the profit at the end of the day. These are not government companies to give you, yes, I got the loss, give me. It's not not a social welfare. We need to understand it's a business. So digital platform, lowering costs, innovative products, better risk pricing, wider rural outreach, then only insurance will grow. Because in India, even now 45% of population in India is in the rural areas. Urbanization is still increasing. So pensions are growing, but in the informal sector, but small coverage. Insurance is large in size, but lower penetration. Large in size, there is huge capital, big companies are there, but it is not penetrating into the rural market. Only the bigger companies are getting insured. Amount of money is huge. Bigger companies are huge who invest and who are getting invested. But there is also higher cost and lower outreach. When it is moving away from high net worth individuals to even everyone at the strata like middle income people, lower income people, they can create economies of scale. They can't generally depend on only the high class, highly valued people parking their huge assets and getting the sum insured for them. Okay, so insurance in India is it's a niche sector. It is for farmers, it is done with the help of the government. Middle class people are not insured. Only the high network individuals who have wealth, those people are getting insured. So this is one more thing. Money multiplier concept. You have seen money multiplier concept in prelims exam. Yes. Now write a concept. CRR has reduced from 4% to 3%. The economic survey says that headline M0. What is M0? Broad money. M3 is broad money. What is M0? So M0 is the average money that has been in the circulation in the market. Okay. M0 talks about money that is there with the public plus money that the banks invest with RBI is M0 money, which is the stable money in the circulation, that is M0. M3 is broad money. Broad money means all the money which is there in the public plus the deposits that the people have with the banks, not the money in the circulation. Banks putting money with RBI, investing money with RBI, with the RBI securities. Who? Banks. Banks investing money is SLR or CRR? CRR, where they put 4 or 3 lakhs of money with the RBI. They don't get any returns. SLR is where the banks put the money in the form of cash, gold, government securities, and they get some kind of returns on them because it is government securities. From RBI, they buy the government securities, they park the money for the safety, right? So M3 and M0 are very important, and M3 and M0 are growing or rising is very important. See here, the economic survey says that CRR, cash reserve ratio, where the banks deposit the money with the RBI, is decreasing. But what is M0? Money with the public plus banks investing money with RBI, which is CRR, plus banks investing in other assets of RBI, other deposits with RBI. So entirely whatever bank money is investing with RBI and money within the circulation or with the public is what M0 is. Okay. So basically CRR reduced. If CRR reduced, the value of the money compared to last year to this year, M0 might structurally reduce. Right now what is happening? M0 has structurally reduced. It means it fell by 2.9%. Okay. Structurally it reduced, or technically it reduced. Number wise it reduced. But that does not mean money circulation is less in the economy. Why? If CRR money has reduced, which is one part of liquidity adjustment facility, which is you're parking less amount of money compared to previous. It means there will be more, in reality there will be more money in the circulation. If CRR rate reduced, banks can give more loans, more money will get multiplied, right? So it is falling structurally, but in reality CRR has reduced, which means in reality M0. See, if I talk about on the face value, it is called as headline M0. If I adjust it to the real value, because CRR getting reduced, money circulation has increased drastically, which is making M0 value be higher. Rate is becoming lower because CRR value within this equation is reducing. Structurally in the namesake it is reducing, but in real terms adjusted M0 is rising to 9.4%. Is that clear for you? Okay. So actually what is expanding? Liquidity is expanding. Money supply is expanding. Right? Got it? Then M3, which is broad money. Broad money means what? Everything in the circulation. Whatever money you have put in the bank, you will get the interest. And there can be time deposits. There can be demand deposits also. Whatever, it is a broad money which is in the circulation. Okay. So it is also rise. It has also grown. Okay. M3, M0 growing means money is growing within India. That is one concept. Okay. So money multiplier is M3 by M0 into 100. It has increased compared to past year. 5.70 is the past year. It increased slightly, 6.1. So what does it mean? More credit is given. What is the concept of money multiplier? 1 rupee if it is there, I'll give loan for you. You will generate interest. You will give me interest. Based on that interest, I'll give that interest in the form of capital loan for other person. With 1 rupee, you are creating a return of certain percentage, or you are creating 3 rupees or 5 rupees. Physically, 1 rupee maybe. But in real value, in the real circulation, it is becoming 5 rupees or 6 rupees. That is what money multiplier concept is. So there is better credit creation within the economy. Why there is better credit creation? Interest rate is neutral. Sorry, RBI policy has become neutral, and moreover, RBI has reduced CRR rate. There is liquidity expansion as it is giving loans. Economic activity is getting generated, growth is getting created, credit creation is happening within the country, right? Headline, did you understand? Headline, adjusted, did you understand? Same concept. But in reality, if we see, the rate might be less because CRR we have reduced. But because of CRR reduction, what is actually increasing? Liquidity is increasing in the market. Banks can lend more, which is adjusted M0. Understood? That is one thing. Now you can write this. Employment. $443. We'll talk about lot many schemes here. Thank you. Write in the notes. Agriculture, how much employment? 42. Industry plus mining, 24. Services, 33.5. Unemployment among women fell. Done? So see here, employment levels are increasing. That's what government will say. Economic survey also says that financial year 26. Labor force participation rate is stabilizing. What is labor force participation? People who want to do the work. People who are already doing the work. That is labor force participation. Okay. Unemployment rate has reduced to around 5% range. Reduced, but it is still a problem. Sectoral distribution we have seen. Here what we can identify, the largest sector which can create jobs is actually having less number of people. More number of disguised unemployment is there in 42.4. Less value, more number of people in the less value creation jobs. It means not everyone are getting equal salaries. Everyone is working underemployed, right? Underemployed is a right thing, no? Next, services 33.5. Female labor force participation is increasing, and there is feminization of agriculture concept in 2018 economic survey highlighted that, and 2022 economic survey highlighted that lot of people, women, are actually in the STEM courses in higher education. That's why we can see a lot of log jam where women are studying and not doing jobs because of variety of problems like patriarchy, etc. And people don't want to, the women who are in the high income capacity, they don't want to work low paying jobs. And lot of people, women who works is rural areas, who work as a agriculture labor, but the assets with women are very less on their name. They are just working, that's all. Understood? Even in rural areas, though we talk about feminization of agriculture, they are just working. That does not mean land is on their name. Okay? They are managing as a wives or whatever, or cheap labor, but they don't own anything. Okay? So this is the problem here, and a lot of people are working in the studying in the higher education. That is why the Economic Survey 2022, it highlighted that that's the reason why we can see less participation. In future, they come to the market. But historically, if we see, women participation in the STEM sciences is very less. Science, technology, engineering, mathematics. Okay? This is the basic outline you need to know. And apart from that, female labor force participation increased 23.3 to 41%. Where it increased? It might have increased in the informal sector or somewhat in the formal sector, but not very drastic. And we need to know that 23.3 to 41.7 does not mean there is 50-50 employment. Out of 100, how many women are participating? Before, there are 23.3 women, 41.7%. It means even now 50% of women don't want to do the job. It means where we can use our demographic dividend? We can't use. Half of the working age population is not interested to work at all. So there is what? Demographic dividend not getting used properly. That is why in labor codes also, women encouragement is allowed. Basic income, universal equal income we talked about. Providing good employment even in the night time we talked about. But security is one of the reason why they don't want to work. Okay? Mobility constraints, social factors. Basic thing, social factors are the thing. Stigma is one more thing. And women going to STEM sciences not getting encouraged is the other thing. Caregiving burden is there. Lack of creche facilities. Lack of what? Maternity leaves for them in the companies, and companies don't hire them because of what? Because women, again, they go for marriage leave, they go for caregiving leave, maternity paid leaves is there. Maternity Pradhan Mantri Janani Sishu Suraksha Yojana is there, and this maternity benefit act is there, 2018 maternity benefit act, where it says that every formal woman who is working in the formal sector, she needs to get a paid leave for 3 months postnatal and 2 months pre delivery, like that. There are some days where the employer need to give free salary for her, and that is one of the discouraging factor. What Economic Survey over the years keep on telling is, introduced a model where the contribution will not be only from the employer, from the government also. But government is not doing that. Though government do it, people don't want to follow it, and that these are the some of the reasons. So pretty much social factors are the reason. Lack of STEM participation. If women are not going for STEM, they need to do low income jobs only. In low income jobs, there is no formalization. Then there is no equal income also. Though right now labor codes are coming. So it's all perennial problems. Okay, got it? So there are schemes like working women hostels, like providing safety in every district. V-Hub is there for women entrepreneurship. Kudumba Shri, Kerala, SHGs, women in order to create credit creation within women. Mahila Ardik Vikas Mahamandal, these are the initiatives of states to encourage women to come forefront in the economy. STEM, the economy also come under the science. Entrepreneurship come under the science basically. Okay. E-Shram portal, this is there in the news, please write. These are the schemes, can be asked in the exam. E-Shram portal FAST, it's a national database of unorganized and extended social security coverage. National database for unorganized sector is E-Shram portal. single universal account number will be there for all unorganized workers under this. Single universal account number, Aadhaar linked portability will be there. All welfare schemes, whichever state you live. But based on your Aadhaar, all if the state other place it is implementing, that will come into DBT. Includes gig workers, street vendors, all unorganized sectors. 31 crore workers registered under this, 54% registered among them were women. Integrated with 18 other social security schemes. So workers excluded formerly were included now in the database, social security coverage. So there is targeted delivery of benefits for the people, unorganized sectors. Whatever unorganized people, government is giving them money, social security benefits. Wherever they work as informal workers in the other state, government will do register and provide DBT for them. Okay, so it will lead to we will get to know how much workforce is there by doing all this, whether they are working or not, where they are working. It all leads to formalization. That is one added advantage, not just for formalization. We need to give benefits for them. That is the main idea for it. Okay, so it will eliminate all the ghost beneficiaries, save lot of money, and money will go to the real people. Okay, so we have seen it want to build national database, enable portability. Portability means already we have discussed, wherever I go I need to get my benefit. Extended social security. Okay, so other platforms are there which is called as National Career Service. This is one-stop digital platform connecting national career services, job seekers, employers, and training providers like ITIs, industrial training institutes, and career counselors. All people will be there at one place. And international jobs also will get posted here. And here there will be working of EPFO, Employee State Insurance Corporation. There will be DigiLocker, eShram. All this will be integrated. Okay. This we will discuss. So Skill India Digital Hub. This is one other thing. NCS. First basically you write this. Later we will see each one. 1 second. Basically write this ministries. Pradhan Mantri Krishi Vikas Yojana and National Apprenticeship Portal Scheme, Skill India Hub, and skill loans will be given by Ministry of Skill Development and Entrepreneurship. eShram, Pradhan Mantri Shram Yogi Mandan Yojana, NCS Career Service Labor Codes will be implemented by Ministry of Labor and Employment. Then there is National Apprenticeship Training Scheme, that is basically by education, technical education scheme is there, that is also by Ministry of Education. Rural Development, Deen Dayal Upadhyay Gramin Kaushal Yojana, by not just by Skill Development Ministry. You can get confused among these ministries, but there are different ministries implementing them. Finance is about funding and this one. MSMEs, SME Apprenticeship Promotion, Women and Child Development for Female Labor Force Participation Schemes. So digital platforms and integration, these are different ministries. But basically this above 4, you basically write above 4. Above 4 you might confuse. First write them and we will discuss each schemes one by one. And remember those. Skill India Hub, SIDH means Skill India Hub. These are discussed schemes in the economic survey. We are not including all schemes. Whatever there in the survey, we are seeing which ministry, that's all. There might be more schemes also. If we go into the details of every ministry, sectors, etc. Right now, in the employment chapter, These are the schemes discussed. Write this 4. Finish, no? Okay, let us go back. So what is National Career Service? Everyone will come to the same place. People find careers. I'll give jobs. So it's a easy portal. NCS under which ministry? You have written no? Labor. Skill India Hub? Skill Development Ministry. Ministry of Skill Development and Entrepreneurship. So what is Skill India Hub? It's a central digital platform for providing all skilling programs. Whatever is available in the state, they'll list out wherever you need to go, which district you are, what are available schemes, what certificates you will get. There will be certification, and you can do that courses online also. There will be certification for you. Okay, credentials. The organization like Quality Council of India, they provide some credentials for you, that what work you have done, based on that all things will be done. Job matching, like what are the available jobs, can be posted by industries, can be posted by public sector units. People can find the jobs there also. You can post your profile there. It works just like LinkedIn or something like that. So importance, it is integrates all skilling initiatives, reduces duplication, tracks outcomes. So basically it is to create a normal database. Then there is Pradhan Mantri Kaushal Vikas Yojana. It is providing short-term skilling for the youth. So there are certain problems, as we know. So in order to create short-term skilling, there is Pradhan Mantri Kaushal Vikas Yojana. Then there is Pradhan Mantri Shram Yogi Mandan Yojana. It's a pension scheme for unorganized sector workers. It was launched in 2019 by Government of India. Shram Yogi Mandan. So objective is age-old income security for informal sector, informal workers. They have no PF, no pension, work on daily wages, and they face income insecurity after 60 years. So it is for unorganized people. They don't get pensions, no? For them, it's a pension scheme for them. So they can provide some certain amount of money into the savings every month. After certain years, government also will add some money, and they'll get significant amount after they cross 60 years of age. So implemented by Labor Ministry. So operated through Common Services Center in rural areas, labor offices, and e-Shram portal integration. Okay. So in the economic survey, it is mentioned as a social security scheme integrated with e-Shram portal. So this Shram Yogi Mandan is integrated with e-Shram portal. Okay. So unorganized worker, he'll register on e-Shram. They get access to Shram Yogi Mandan also, and there will be regular contribution from him, and pension security will be provided in the old age. Not free income. They need to invest certain amount of money every month. Okay, or they can choose options yearly also. So this integration helps in, because they'll register here. When they register in e-Shram, whatever government is providing, when they are registering, they'll get all social security benefits. And if they really want to save certain money, they can link it to Pradhan Mantri Shram Yogi Mandan Yojana. Okay. So everyone can join. Eligibility conditions is 18 to 40 years of age. This question has been asked because there are two conflicting schemes. 18 to 40. 18 to 40 only. Beyond 40 people cannot. Till 18 to 40 they can invest. Monthly income, whoever have monthly income below 15,000 they can do it. And guaranteed pension what they get is 3,000 after 60 years of age. Government also pays certain money here. It's not just only the person. Eligibility is 18 to 40 years of age. National Apprenticeship Promotion Scheme. It is a apprenticeship. It means skill development. Promote apprenticeships. Apprenticeships means what? People after getting studied or having a career break or study break, they can go to the industrial training institutes. Where there will be industries, there will be government. They'll train them on plumbing, on electrician courses, where they can do something, some economic activity which can be informal most of the time. Okay. So they provide financial incentives also. If they do good, you come get skilled, I'll give travel expenses for you, like that. Or if you get good certificate, there will be some contribution like 1,000 rupees, like that. 25% of stipend paid directly to apprentices via DBT. 25%. It means government is contributing to the stipend. Employer will also contribute. They are not working for, they are getting skilled, and also they can have a potential to get future opportunities from the same industry. Transparent payment mechanism, because DBT is introduced. So 1100 crores were released. Okay. Cost burden between government and company, and youth will get structured learning. It means they'll get to know real industry skills rather than just studying. So that is a thing we know. Then problems were low. They overlap with National Apprenticeship Training Scheme. There are multiple portals doing same thing. Okay. So what economic survey says this? Integrate all the apprentice, means skill development schemes. After the studying is completed, many students, if they are dropouts or non-dropouts also, they go for industrial apprenticeship schemes. In every district they will be there, organized by the government. Integrate all of them. That is what economic survey says. Put single portal. There is district skills committees, and they need to work for making and encouraging labor, all the workforce come together. MSME cluster models should be there. All the MSMEs, suppose if all the different sectors of MSMEs are in one area, then it will be useful, because we can integrate the youth with that MSME clusters. They can participate in the MSME jobs. Insurance and mobility support should be encouraged among them. So what is National Apprenticeship Training Scheme? It is by, not by skill development, but by the Ministry of Education. So it is mainly technical graduates and diploma holders, and it is for formal sector. This one is apprenticeship and pension scheme. This one is for informal, that is for formal people who have technical skills. Okay. So the difference is, this covers variety of skills, that is technical graduates will do that. It is almost all the sectors, that is primarily technical. There is portal for it, and there is also portal for that, but different ministries are there. Okay. That is formal. This is more informal. NAPS, NATS. Technical means education. Ministry of Education will come into picture. Okay. So two portals, two ministries, confusing for all the people, and even confusing for the industry. Industry for whom it need to give jobs, only for technical or non-technical people, where it needs to collaborate with. Okay. So merge both and create unified apprenticeship program. You can write this as your suggestion. Economic survey suggested to create unified apprenticeship scheme. You can write that in your answers. In demographic dividend answer, you can write In skill development question, you can write that. Okay. So outcome based financing models have also been suggested here. Skill impact bonds should be created. Skill impact bonds. Who will float that bond? Skill impact bonds. Government will float, or public companies, government agencies can give bonds in the market, like we have discussed panchayat bonds, panchayats releasing bonds, they can get the money. But it is very risky because they come mostly under social sector initiatives. Skill impact bonds, if they are given by the government, or districts if they are floated, money will come for skilling people. After skilling people, if they don't they just got some stipend and they left it off without creating any economic activity, that will be one more burden on government. Aunaka, yes or no? Bonds will be floated by the labor ministry or district labor committees or district skill committees. They can float the bonds, or district collector can do. All this can be done. People can invest. But what is the return? Where the returns will come from, that needs to be quantified. And performance linked payments. Stipend is not is given for the people who participate. That should not be only the case. Based on their performance, money must be given. More serious people will come who want to grow their career in the long term. Yes. Okay. So traditional funding is for payment for training. You come, you get trained. That is the incentive. Just do something and go, I'll give you money. For training, you are paying the money. But it leads to inflated enrollment. People just will enroll. There will be no outcome, just like skill impact bonds. So outcome financing, payment for employee. After getting training, if you get employed, then you pay. That is what is the total idea, no? You just coming and having attendance is not the idea. Based on attendance, we paid till now. Even the industry is also paid based on attendance, the stipend. You are getting the apprenticeship program after your study is over in order to make you equipped with skill, hand skill, not the skill that you just by heart from the brain, right? You need to do things. So if you get based on your talent, based on your performance, you will get job, and then the money will be given. So there will be better accountability. That can be the suggestion. So outcome financing should be focused in the skill development area. Yes. Okay. Pay for, not just for training, pay with employment. Pay for employment is the idea. Employer co-funding model used in countries like Singapore, Ireland and Korea. Employers contribute to the training funds, courses align with the real needs and better placements. Here most of the chunk, India, some industries are paying, but mostly it is paid by the government. There is Orissa model highlighted in the economic survey, very important. Please write that for your economy answer writing. Orissa says that fix a scale, accelerate. What they will fix is, they'll fix their infrastructure, they'll fix their finances, they'll create skill committees. Fix a skill, fix a scale, accelerate. First they fix their infrastructure, fix their systems, fix their institutions which skill people in every district. Okay. Then what they do, they recruit people, encourage people to join short term skilling courses they do. Then accelerate that to the higher levels, include big institutions, big companies in order to work with government. This Orissa have started skill, scale, accelerate. Sorry, fix, scale, accelerate. Perception has changed because a lot of bigger companies started coming, collaborating with government. There are avenues that are created where people can participate in almost all regional areas. Bigger companies come, they provide their certification, occasional training recognized both by industry as well as government. If only small players are coming, people don't pay that much attention and there is trust deficit. If bigger players and bigger companies are coming, if it is scaled to that level, provided good certificates, then the training will go, money will be useful, and moreover, it will create more employment also. Rather than big companies recruiting people from other states, the people of Orissa and people of those colleges who have received the real hand experience, they get more employed. Okay? Not just certificates where you have passed some exam. How much real work experience you have is being quantified with the help of companies, and government incentives will be given. So that is a model very highlighted in the economic survey, you can use in the answer. Then there is mental well-being system. Buddy is a system that has been created in order to solve the problem of mental suffering among the work population. Loneliness, anxiety, all these problems people face. So this is one incentive that the government have started. Then there is earned wage access, allows workers to access wage before payday. Cash flow stress will reduce. Higher interest borrowing, people face that even before the payday, even before the first, if salaries get credited, then they can use it rather than going for borrowing. And it will solve the problem of absenteeism, reduce financial distress, liquidity crisis, it will address lot many things, general things, all that we face. Okay, there will be higher productivity, like it will work as an incentive. Okay. There are other structural reforms done by the government, that is GST, labor codes, and deregulation of markets. There are stricter rules before. Now in every industry, government is trying to do deregulation. Budget also, government is telling deregulation, deregulation. Banks, deregulation. Almost less rules, less rules. It means less government, more governance, right? So digital platforms, career service portal, Skill India, digital hub, eShram. Manufacturing growth also have risen. Large factories expanding in manufacturing, 6% job rise happened in 2024. Female labor force participation is on the rise. Then gig economy expansion also have happened, very large. In labor codes, we can see the details of labor codes. Okay. Skilling reforms, there are APAR initiative, EPFO, and Skill India Hub. There is merger of both the schemes. We did talk about MSME incentives are there, district skill committees. We did discuss all these things. Data integration needs to be done. So what we can do, and there is data integration of different sectors or different portals. One is informal, one is formal, one is regarding skill incentives, one is regarding how many people are getting skilled, another one is regarding how many people are there actually in the workforce, whether it is formal or informal. If we collate this data, we can find better economic indicators that leads to formalization of economy. We can also have better indices in annual survey of industries, labor force participation rates we can increase. Government can create better policies regarding how much employment is there. In every sector, we will know how many people are getting employed by doing all this. Okay, only in formal sector we know how many people are participating, how many informal workers are there, what problems they are facing, how many dropping out. If we know, we will know the trajectory of each sector every year. Textile growth this much, it is employing this much. So what we can do, lot of money will be focused on giving that resources to a particular sector based on increase or decrease. Data is very, very important. Even for RBI, we'll discuss AI. AI is entirely based on data. Yeah, there is separate chapter of AI. RBI says that I am doing many things in the case of AI. We'll integrate in every bank, AI framework will be integrated. Even in almost all the sector, companies individually are adopting to AI. Okay, so data integration is a basic for any AI model to be successful. and we have discussed this. And Pradhan Mantri Shram Yogi Mandan Yojana we have discussed, E-Shram we have discussed, and these are the same things. Deen Dayal Upadhyay Gramin Kaushal Yojana, it is by the Ministry of Rural Development for rural youth skilling and placement. Okay. Then recognition of prior learning, it is under Pradhan Mantri Kaushal Vikas Yojana, certifying skills already possessed by the workers under recognition of prior learning. Now it's not, see, you will get tested for certain skills, whatever skills you have. Some people don't have formal certificates. What I'm saying in the eShram portal, informal workers I'll register. How to certify them? Based on whatever learning they did not do formally. So there will be prior learning recognition also. So people can employ. Tomorrow if they are quitting a job, new person will see. Based on what identities people will get job, based on what skills they have. How to certify them? Government will involve in that certification. Okay, for using that, what I'll do, use eShram, use apprenticeship scheme, use National Career Service portal where they can get job opportunities also. Government security will also be included. All different sectors will be included. It will be like I'm creating a ecosystem, digital ecosystem for everyone. Okay. Credit Guarantee Fund Scheme for Skill Development. Ministry of Skill Development and Entrepreneurship Skill Loans for Credit Guarantee. Then Model Skill Loan Scheme, it is also by MSDE. Expand credit access for skilling. Skill Impact Bonds. National Skill Development Corporation will float that bonds with private partners. Payment based on employment outcome. It is not based on how much training you got. Then One Nation, One Ration Card. It is for food distribution for all migrant family. So Ministry of Consumer Affairs. Yes, food distribution, one ONRC. ONOR. Okay. ESIC and EPFO, integration, labor and employment for formal sector. PM Setu. What is this? Industrial training institutes will be there for modernizing industrial training institute. It is under MSDE. These are the schemes mentioned. Already they are there. Economic survey is talking about how to use them, how to integrate them, which ministries are doing what is more important for prelims exam. Okay. Yes, we have discussed almost all things. RBI governance free AI framework. This is one more thing we need to discuss. Encourage innovation, ensure risk control. With AI, the AI will take better decisions. Lot many people are doing it, but if our AI is not effective, decisions will also be not effective. Why we are using AI? To make decisions quickly based on data, because huge loads of data will be there. We will feed that data into the system. Suppose you want some answer regarding your particular life problem. You will tell all your problems in last 10 days. It will tell you a solution what you need to do today. That is what it is. AI will give a decision making. But if you fed all the wrong data, the advice it gives is also wrong. And that applies to everything, even in the industry, even in the financial markets, right? Data is important. Data collection is important. We are talking about penetration of like AI being used. But if it is not effective, entire economy will collapse. So there should be risk assessment of AI also. How it is effective. There should be models to insure us from AI things. There should be some regulator for this. Till how much extent we can make AI to penetrate into securities market. How SEBI can regulate AI use in this capital market. So that there can be protection of this capital markets also, financial markets also. If everyone is telling AI to invest in the stocks, let us say all the money is invested in a particular stock and tomorrow it fell down, crashing of financial market will happen. So how RBI is going to regulate that? How we can enhance this transparency and effectiveness is more important. Okay. but in a separate chapter we will discuss regarding AI. There's separate chapter also. So 7 sutras that the RBI is talking. Trust need to be created, and AI should be for people's use, not for companies. Innovation, fairness, accountability, transparency, safety, and resilience. These are 7 sutras through which the AI must work. And the focus for government should be on AI infrastructure, regulatory sandboxes. Sandboxes means, what is a sandbox? Many times we have seen sandbox. Suppose a technology is there. Everything related to that technology. How to use that technology in a better way. For whom it will create a benefit. How to regulate it. How to create different systems, different innovations within that. How to increase R&D within that particular technology is what sandbox. It is like, I'm creating SEZ for what? Creating manufacturing. It can be textile manufacturing, it can be any kind of manufacturing. So sandbox basically means that entire ecosystem need to be developed, whichever sector you adopt. Tomorrow you adopt, whoever adopts it, it needs to be effective. That is what government need to do. Create regulatory sandbox means create an ecosystem which will regulate AI. Create a system which will propagate AI. India AI mission is there. Why? To make AI work for India. AI help India, like help people. That is India AI mission. There are lot many programs government is doing with respect to AI. Data protection and ethical AI is another concern. We know this very well. So that is it regarding the monetary policy and labor and employment stats and schemes which are discussed in the economic survey. In the next session, we'll discuss agriculture, industry, services, AI, and inflation. By this, we will finish the most important chapters of economic survey. Okay, thank you. That's it for today's class. Thanks.